Hello everyone, my name is Pratik Tambre and today we're at the 8th edition of the Asia Pacific Precious Metals Conference here in Singapore. I have Mr. Sachin Patel from the CME group here. Hello sir, how are you doing?
I'm very good. Thanks for having me, Pratik.
Thank you so much sir for this opportunity to take your interview. So sir, if we can just talk about the varied range of products at the CME group and the COMEX as well.
Gold is our biggest part of the metals business and has been for a number of years or a number of decades. The exciting thing for us is that actually the product suite has really expanded, even compared to this time last year. So the benchmark product that we've had for actually over 50 years now is the 100-ounce future. And the overall performance of that product has been exceptional, but the real growth that we've seen in our business has come in some of the newer products that we have listed. For example, the micro gold, 10 ounce, a very new 1 ounce contract, and then also our suite of options as well.
So coming to the participants at the CME group and the COMEX, have there been any changes in the participants in the recent years or the last year as well?
I think the great thing about our market is that we can really say that we count on the full variety of market participants as our important customers. So hedge funds, asset managers, banks, proprietary trading shops, the refiners and the commercial participants. For me, a big development this year has actually been the increase in retail participation in our markets. Now, gold, out of all of the products that CME Group offer, gold is very often a popular product for the retail market to trade, especially in Asia. I think there's a very, very big affinity of Asian market participants and gold. But this year, one of the quickest growing contracts that we've seen has been our micro gold contract, so the 10 ounce. Those volumes are over double what they were last year. And that is usually a very, very heavily retail oriented product because of the smaller size.
With the unprecedented volatility in the gold market and the price rising to almost all-time highs in the past few months now, has there been any change or a shift from higher contracts to people participating in the micro contracts or the lower ounce contracts now?
Shift is maybe the wrong word to use there, because I think each contract has its distinct audience. So if you ask me, do we see people moving from the 100 ounce to the 10 ounce? I would say no. That 100 ounce is still the core benchmark product of our business. It is still where most banks and hedge fund managers and asset managers and refiners would go to manage their risk. But what we have seen since we launched the smaller size contracts, and the 10 ounce gold contract is actually over 10 years old, when prices increase and the overall value of a contract increases, and thus maybe the margins increase, you do tend to see a pickup in appetite for something of a smaller denomination. Because if you think about it, 100 ounces of gold is a lot of money. Okay, it's almost $350,000 in notional. So a 10 ounce contract can be a lot more accessible for a broader array of market participants.
So can we just talk about the newly launched 1 ounce contract, and what was the ideology or the vision behind it to launch such a contract as well?
So it's the same sort of vision that we had all those years ago when we launched the 10 ounce contract. And it was a understanding and an acceptance of the fact that gold prices were rising and have been rising very quickly, and that there is a buzz around the market, and all of a sudden you actually get to a stage where a 10 ounce contract could arguably not even be considered a particularly small contract anymore. It's now almost $35,000 of notional and over $1,000 of margin. So a 1 ounce contract is taking that same idea and dividing it up even smaller. So once again, you get something which is accessible to a new type of client.
So other than financial institutions, are there any increased participation in the retail sector as well in the CME group contracts?
Yes, I think that the growth that we have seen in that micro and the subsequent launch of the 1 ounce, which has been trading about 10,000 contracts every day this month, is great evidence that there is a renewed interest from the retail space into gold. The other thing that I would highlight actually is the growth that we have seen in our options products. And a huge driver behind the growth that we've seen in options has been CME's listing of new expiries. And now we have an option that expires on every day of the week out for the next month. So you can really tailor your position for a specific expiry date, maybe around an NFP release or a CPI print, to manage those short-term risks.
There was news around the market, I think earlier, a couple of months back, that there have been unprecedented rise in the COMEX vaults and the inventory basically in the COMEX vaults. So if you can just shed light upon that as well.
So absolutely, and I think this is a really, really important part to highlight, because for a number of months, December, January, February, really until April, the major theme in the gold markets was one of dislocation between the COMEX futures price, the LBMA price, which started to trade at a very big differential to each other. And that differential at that time was a big CME premium. So what that ended up resulting in was a huge amount of gold being delivered into the CME to capture that premium. And we saw our inventories rise from around about 17 million ounces all the way up to 45 million ounces, and have actually now, in the last 2 months, started to see flows go the other way and some loadouts. So I think the CME market has become a much bigger and important part in actually the underlying physical markets. More of our positions go to delivery than was the case if you take the average maybe over the last 10 to 20 years. You look at some of the deliveries that we've had this month, over 75,000 contracts, so 7.5 million ounces were delivered in February, another 6.5 million ounces in April. These are big numbers by historical standards. It's all driven by that arbitrage opportunity to capture that differential.
Yeah. So thank you so much for such an elaborate answer, sir. If you can just tell us, as you have been attending the APPMC since quite some time now, what are the changes you have seen in this conference, and how has it grown according to you?
The growth is so clear to see. I've been told that there have been over 600 participants or registrants this year. And I feel my first APPMC, which I think I remember was the second one that they'd ever done, that number was closer to maybe the 200 mark. So this has become such an important part of the overall gold landscape. I really think the SBMA have cemented this as one of the key conferences in the world that is a must-attend event. And for me, the amazing thing about this is how it is bringing the region together. Getting that input and update from Southeast Asia, from mainland China, from India as well. It really gives us as a global exchange a flavor of what's going on in our regional markets here in Asia.
Yeah. Thank you so much, sir. Once again, thank you. Yeah.